Yep, okay. Okie dokie. Right, good morning, everybody. Thank you so much, Rachel, for giving me the opportunity to speak to you all and tell you a little about all about me and the business. Here we go. I'm Roxanne Goodman, founder and owner of the Female Founder Group, the UK's first and only commercial finance and business support system built entirely for women to support their businesses. It's our mission to empower female entrepreneurs by offering tailored solutions designed to fuel your growth and bring your businesses to life. So let me just drop there. Okay, so who are we? So Female Founder Finance was created to empower women business owners with access to finance and business support services. Tailored financial products built specifically for women in business, including expert partnerships, allowing you to focus on running your businesses and leave the support to us. Resources designed to help you and your businesses to thrive, including networking events to empower women to meet other like-minded women and business owners in a safe environment. Women in business face unique challenges, nervousness, self-doubt. Are we good enough to be able to scale our businesses to where we want to go? Do we get overwhelmed when we're dealing with challenges? Do people listen to us, and do they understand the journeys that we want to go on? These are all things that my clients have said to me that they are fearful when they're starting their business journeys. So we have some voices in some really high places because everybody that we work with understands the journey that female founders are massively underserved, especially in the finance industry. So I've got a seat on the APPG Women in Enterprise in Westminster. I was recently in the Times and the FT, and also recently invited to number 10 Downing Street to speak to the Deputy Prime Minister and the Department of Business and Trade on the differences and challenges that female business owners have when trying to scale businesses. Oh my goodness. That shot on far too fast. Just bear with me 1 second. Okay, so I've got a little video. I hope you can see all this.
We can, but we can't hear it.
Oh, okay. So it's some of you might recognise it's the bank scene from Harry Potter. Hermione Granger is the character in Helena Bonham Carter.
I wish enter my bonds.
So a really key takeaway from that that was highlighted to me actually by my sister is that not one of the goblin characters within Gringotts Bank is a female. Every single person that works in that bank is a male, which kind of starts to, when you think about it, starts to underpin the systemic bias within the finance industry that you can only be a man if you work in a bank, which is something that we're really trying to challenge. And I know that Rachel's really a great champion for women in the finance industry herself. So the Rose Review was a 2019 initiative that was set up with HM Treasury and NatWest Bank. It highlighted that 34% of UK SMEs are female-led. 63% of those women that were surveyed cited access to finance as a barrier to growth. 35% of those women reported encountering gender bias when asking for finance. Almost all female founders bootstrap, self-fund using credit cards or borrow from friends and family to get their businesses off the ground. The review also highlighted that £250 billion can be added back to the UK economy if women had the same access to funds as their male peers. The average lend to male-led businesses is £507,000 per application. By comparison, the same applications only net on average 174,000 female-led businesses. There's several reasons for this. Women are more likely to underestimate their true potential, are definitely more risk aware, and sometimes are nervous to overborrow. Everybody knows that women invest in each other, they support each other, and the female community is all about empowering each other to succeed. It's proven that the majority of female angels invest back into female-led businesses. Pound for pound, female-led businesses return 33% more on the funds raised. So we're trying to replicate that model for finance. The vast majority of female founders we work with have purpose-led businesses. They're created to help others or to prevent issues and situations that they've encountered from happening to others. A perfect example of that we have been dealing with a lady who set up a kind of dating app. She went through a horrific experience. She met somebody on one of the most famous dating apps that's out there, and she ended up being assaulted. So she has created an app that does all the background checking first. So it does the sex offenders register, CRB checks to make sure that the person is safe to be on the dating app in the first place. Female-led businesses are less likely to default on debt arrangements, and only 11% of businesses defaults in the UK are attributed to female founders. So, risk-wise for female-led businesses, normally I would do this face-to-face. So, if anyone has any indication of what percentage female-led trading businesses went into the last 12 months, if you want to put your answers in the chat, the closest one that I get, I will send out a female founder water bottle to as a well done. So I'll give you a minute if you want to just pop your answers in before I reveal.
There's a big variety. I put 30. Susie said 15. Alice said 80. Alice is a pessimist. Natalie said 10. Sam said 42. Laura said 8. What percentage of female-led businesses went into administration in the last 12 months? Oh, so 40, 55.
My slide before said that the females return a higher, they return a higher percentage on revenue.
So the lowest suggestion is 8 and the highest is 80.
Okay, so the lowest suggestion wins. The actual answer is 2.9%, which is fantastic for female owners. So the lady that was 8, I will, if you drop me a message, I will send you out a female founder water bottle. That compares to 14% of male-led businesses. So the risk of lending to women is significantly lower. So gender bias, we all know that it's there if we're all really, really honest with ourselves. How can you manage a business with small children? Automatic assumptions made without asking relevant questions. AI data is already gender biased, so people that lend money based on AI are already basing their assumptions on historic data. Forbes showed in a mystery shop that their male and female reporters were asked a different set of questions in exactly the same case study. And Shopify showed that 63% of women self-funded because they were deemed to be riskier, despite the stats actually proving that they are better. So this is not meant to offend anybody in the room that might be male, but this is a stereotypical image that my clients describe to me when they are asked about their bank manager. But we have to say it is not all men. We have some fantastic male advocates that work with us. There aren't enough women in positions of power that we can affect change by ourselves. So men that understand the journey of female founders, men who can see what's happening in the industry, who are willing and happy to support us and use their power and their voices to help us empower more women. So why am I telling you all this? If women are a better credit risk, why are they at a disadvantage before they even walk into the room? Why does only 2% of global funding go to women? In the recent Investing in Women code, that figure has actually gone down to 1.4. So statistics are getting worse, not better. It hasn't changed for the better in 10 years, despite all of the forums and groups that are in place. Women are no less able to scale their businesses than men, despite all of the challenges that they face. So we have put together bespoke finance options for female founders, incorporating to try and get rid of all the challenges that we've just gone through. So these are the kind of products that we work with. So we've got startup loans, which is in partnership with the British Business Bank, merchant funding, unsecured business loans, invoice and asset finance, HMRC funding, commercial mortgages, professional landlords, trade and currency. So I'll go through all of these in a little bit more detail. Startup loans are a government-backed initiative. They are unsecured, but they are a personal loan. So they are to you as the individual business owner, not to the business itself. They are low-interest loans that come with mentoring to help you start and scale your business. You can borrow up to £25,000 per director. There can be up to 4 of you within the business. So potentially between you, you could have access to £100,000. It's a fixed interest rate of 6% per annum. The loan can be repaid over 5 years, and there are no fees for arranging the facility. A case study that we've worked with recently, 2 ladies were setting up a children's play centre. They applied for 25,000 each, so they got in total 50,000 for the business. The funds allowed them to take on the lease of the property from the landlord and working capital to see them through while they were reopening the site. It's a valuable community facility for families in the area. Merchant funding is not like a traditional bank loan. It comes with no interest rates or fixed monthly repayments. Repayments come out of the business's future credit and debit card payments automatically deducted at source. So in quiet periods, it means you can repay less. It's great for seasonal businesses over, say, hospitality industry over Christmas, where you're turning over a higher amount, but then perhaps you need to spend more in stock. Recently, we looked after a sandwich shop who needed working capital to invest, improving the sandwich bar and refrigeration systems and to take on some part-time staff. So we released them £13,000 using their credit card machine. No personal guarantees with that facility, and you can have that kind of funding whether you're a sole trader or a limited company. Unsecured business loans, you can borrow funds from between 6 months and 6 years. There's generally no penalties for repaying early with unsecured funding. Anyone with a trading business can have a business loan. Unsecured loans still do require a personal guarantee, and they can have interest rates and fees that are higher than secured facilities, but they do offer more flexibility on what you can use the money for. And if you are ever asked to provide a personal guarantee by any funder, there is something called PG insurance that we can put in place to kind of protect you against any liability should the worst happen. A legal firm in London, again female founded, was looking for some funding to develop some AI software for her business to allow her to provide a more streamlined service to her clients. So there was no physical security, but she did require a PG. Again, that was insured with the PG insurance, but it's a fully claimable business expense. Invoice finance allows you to draw funds against your invoices when they're raised, rather than waiting on payment terms, in some cases up to 120 days for some customers. You can have an invoice finance facility regardless of whether you are a new start or fully fledged trading businesses that's been going for 10 years or more. The finance is not sector dependent. There are several types of funding available against invoices. So you can have confidential facility, which is a solution for those who already have a solid financial system in place, so you don't necessarily need any support with your credit control. CID provides working capital against your invoices without the need for the lender to operate your credit control for you. Utilising CID can offer short-term working capital when your business needs it most. In some instances, business can access the funds the same day their invoices are raised. Factoring is very similar to CID, but your invoice is disclosed to your end customer. It's a flexible and cost-effective alternative to bank loans, and overdrafts can be used for startups and earlier stage businesses. The business gets instant access to cash flow to grow without having to worry about high interest rates or fixed repayment terms. Selective invoice finance is when you fund a specific invoice or part of your debtor group within the company's whole ledger. It's unlike traditional factoring where you're required to factor the whole. You can literally specifically just pull out one invoice if you want to fund that. And again, funds can be released against that typically the same day. We helped a lady with invoice finance who was a vegan sausage importer. She was selling at markets. She started off doing farmers markets and trade stalls, but then she was approached to sell into Whole Foods. But then obviously that incurred her payment terms. So we put a facility in place so that she got paid the same day her invoices were raised. Asset finance is a solution that can be used to fund any asset purchase that your business may need to make, ranging from plant and machinery, vehicles, IT equipment, coffee machines. If your business needs a boat or an airplane, for whatever reason, they can be funded. We have also funded cows for a dairy farm, so we can fund, if they're a genuine business asset, pretty much anything. Sadly, we didn't finance a toilet in this instance, but we did finance a tablet powder machine for a lady that was making UTI products. HMRC funding, I'm sure this is probably a topic that Rachel is close to her heart as well. VAT, corporation tax liabilities, we all have them. There are specialised funding that can be put in place to help you spread the cost of your quarterly and annual liabilities. You can either have the funder pay HMRC direct, or they can reimburse you if you've already made the payments. Personal guarantees are only required for facilities over £150,000, and there's no upper limit for those of you who are smashing it out the park and have £1 million tax liabilities. If you can use this facility ongoing, you can dip in and out of it as and when required. This type of facility was recently used for an online retailer client that we have. She needed to manage the quarterly VAT, so she could use that money to pay for stock instead. Rather than negotiate with HMRC, we funded the entire bill on her behalf, and then she repaid that over the following 3 months. Commercial mortgages, basically a mortgage to buy trading premises for your business. Maybe you're renting and looking to buy the site you currently trade from, or you need to buy somewhere new. You own the property at the end of the mortgage term, exactly the same as a residential mortgage. These can be bought in the business or individually via a holding company and leased back to your trading business. Obviously, there's tax implications and planning structures that would need to be put in place. Again, that's Rachel's area of her expertise. Typically, commercial mortgages start from 150,000, but there is no upper limit. We've recently done a £20 million hotel business for another company, so there genuinely is no upper limit. A female-founded business that we're working with in Cornwall, she needed to move out of her shed in her back garden. She was fed up with staff traipsing through the house all day, so she had the opportunity to buy a commercial premises in the town centre that needed developing. So we structured that over 25 years for her. Another example of using property as security is for business acquisition. So I'm working with a lady at the moment who's putting one of her investment properties up as security to allow her to complete on the purchase of a trading business. So that's gone as a second charge, interest only for 10 years, and the business will make the repayments on her behalf. Trade finance, this is probably the thing that we get asked for the most at the moment. Funding to pay for stock you might be buying from overseas. Usually shipping times can be anywhere from between 6 and 12 weeks. Got a couple of clients that have got truckloads of things that are stuck in Russia currently on their way over from China. So they have to pay for those goods up front, repay once the goods are sold in the UK. can be revolving, doesn't need security, and also can work great with an invoice finance facility to, once the goods are here, and then they go to your wholesaler or distributor. A client came to me asking for an overdraft originally. Actually, it wasn't what she needed. It was not the most appropriate funding solution for her business. She was actually bringing in stock from China. So the trade finance facility paid for the goods for them to be shipped over, and then she repaid that once they were sold via her e-commerce website. Again, currency, if you are importing and exporting, you're going to be sending money all over the world. We've got bespoke currency providers that will work with you. No transfer fees or bank charges, can be used alongside invoice and trade finance products, and can integrate into your accounting software as well. We saved the client the 90% of the cost on her currency transfer that she was using through a Shopify account. Just not necessarily, it's always one of the first things we look at when we look at the accounts of a trading business, to see if it's an instant win that we can save them some money. So how do you know what funding is right for your business? You would like to think that you would like to use an expert to support you. The majority of our clients come to us with a specific ask. More often than not, it's not what they actually need. We always say to get the basics right before you start looking for funding. So if there's more than one of you in the business, shareholder agreements, because fallouts can happen, terms and conditions for your business, bank accounts, obviously accountancy support, legal and insurance. Really, really important to get the foundations right before you start to scale, or everything to just tip over. What are we doing to help? So we are raising awareness of the funding options that are available to women, actively promote other women-led businesses, providing network opportunities, initially in our region in the Midlands, but we are hoping to roll those out across the UK next year. And we have lots of examples, as Rachel said earlier, of good and bad internet trolling. Recently, I think it was back in June, I was approached by the Times because of a client that we'd worked with who was unsuccessful getting funding by herself, and she only got the funding she needed when she took her brother to the meetings with her. So this is some of the feedback that we've had online. So I worked in finance for 20 years and never seen any bias based on gender. Journalism's dead. This is just a way for the finance industry to stay relevant. If bias was real, surely it would have been called out. Second-rate PR. So I've got two slides here, and I'm pretty sure you'll be able to see the difference between the male comments and the female comments. No surprise for me, I'm entirely underwhelmed by the UK banking system. Female applicants are less flaky. Reminds me of so many moments when I met with banks together with my business coach, and they always ignored I was the founder. Female founders in our community do struggle. And the best one that was targeted to me specifically was, she only works with women, so what kind of bias is she promoting? So I don't only work with women. I've worked in the finance industry for 20 years. As Rachel said earlier, this championing women with access to finance and support services is a real passion project for me. So I'm going to use my 20 years worth of experience to try and help as many women as I can. So thank you. I appreciate I've rattled through that at quite a rapid pace. If anyone has any questions, I'm absolutely happy to answer anything that you may want to ask me.
Can I jump in and ask one while people work out their questions?
Yeah. Do you want me to come?
Sorry.
Shall I stop sharing my screen?
Yeah, then we can all see each other.
Yeah.
So my question is, what's the biggest misconception that you find? So when I'm speaking to female founders about finance, sometimes I get people that come and they think they need angel investment, and actually it could be that lending's a better solution. What's the biggest misconception that you see from the first time that you speak to people versus the financial solutions that they end up engaging with?
Yes, nearly all of them have gone to their bank and asked for an overdraft. That's I mean, why wouldn't you? Why wouldn't you go to your bank first? They're supposed to be there to support you. But every single client that comes to me, they don't need an overdraft. Quite a lot of them think they need an angel investor, but in reality, they don't. They just need a properly structured facility that's going to help them to grow. So a perfect example of that is the trade finance. And I was actually speaking to a lady yesterday, exactly the same. She asked for an overdraft. A lady in Scotland said, no, it's not. The bank said no. They didn't offer her any alternatives. So I spoke to her, she rang me. What am I going to do? I've got stock, it is coming across from China, it's actually stuck on a lorry in Russia at the minute. I've paid for it up front, I can't get it here quick enough, what am I going to do? So she actually needs a proper trade finance facility, because then once the stock's here, she's pre-sold it to QVC. So she needs a trade finance facility and then the invoice finance facility in, and the money just keeps revolving. And as the business grows, the facility limits grow as well. So she's got permanent support there.
Can I go off the back of that? Is trade finance only available for stock coming in from overseas?
That's generally what it's used for, yeah. Well, have you got
Right.
a specific need?
No, not particularly. It was just out of interest. Like, I don't have the need at the moment, but our manufacturers in the UK. So I was just wondering if there was that kind of just to fund that lag between paying for your product up front and selling it on your e-commerce site.
Yeah, not specific. I mean, it can fund UK trade as well. Most clients use it because there is a longer period of time between obviously paying for the goods and then getting them to the UK.
Yeah.
But it's certainly something that we could look at, definitely.
Okay, thanks.
Sam, go on.
Hi, sorry. Back off of what the lady just said. The names disappeared off the screen. Why is it only trade finances available for purchases overseas? Is that because there's a tax or VAT element, or like why is it not in the UK as well?
So it can be used in the UK, but most clients that we have use it because the lead time is so much longer with bringing goods in from overseas, because it either has to come in by boat, can take up to 12 weeks while it's in transport as well. So it's the extra gap, but it can be used in the UK if you need it to be.
So it's just to receive the money that they're going to gain from selling those goods in advance.
Yeah.
Is that okay? Understood. Thank you.
Yeah.
I'll go with another one if no one's going to. So on your first kind of entry slides, like setting the scenes, you said female businesses, I think it was average pound for pound, return was three times in the investment. What's the average kind of across the investment market? How does that compare to male-led businesses?
So female-led businesses return a 30% greater. So pound for pound, female-led businesses return 3 times more money than a male-led business. So
I see. Oh, okay. Sorry. Thank you.
No, that's okay.
Alice, jump in. These are good questions.
Thanks. Thanks, guys. Sorry, I've turned my camera off because I'm straightening my hair for an important meeting I've got this afternoon, which takes me a long time. So yeah, I'm so pessimistic because I'm just having a hard time at the moment with my own business. I've been running for 10 years alongside my full-time day job. I recently quit my full-time day job, and my business sort of needs saving. So I've recently been talking to old male insolvency practitioners who have not been able to relate to me at all as a young mother. I mean, I'm not that young, but I have a young baby. So I found that really difficult. And I suppose I'm feeling a little bit extra pessimistic as a female business owner, and not feeling like there's much sort of relatability out there. And I suppose that's because I'm going to the normal routes and then being directed to these men who I feel can't really empathize with me.
Yeah.
But my question is, the biggest problem I've had, you see, is about cash flow. And I have a service-based business. So what I sell is training programs and consultancy, basically. And I've had a really big cash flow issue recently. And that's because I've been on maternity leave and like left my business for a year. So I feel like, you know, I'm extra paying the penalty for that. But anyway, so the problem I've had is around cash flow. And I had no idea about, despite having spoken to insolvency practitioners and my accountant, I had no idea about invoice financing. And that sounds really good. I've got some massive purchase orders, and I've got to just wait for them to be paid. And if they could be paid tomorrow, that would really help me and make me feel much less stressed. So I'd love to hear a little bit more about invoice financing and like what interest rates relate to that. And then like another question, if I could be really cheeky to do so, is about equity. So I have a lot of people that, you know, want to work with me and want to help me to grow the business. And one of my options is to get them on board in return for giving out some equity in the business. My ambition for the business is one day to sell the business. And an accountant a few years ago advised me that it would be more attractive when I want to sell the business if the equity situation was simpler, i.e. if I was the sole owner. And so I just wanted to get another opinion about that. Do you agree with that? And is there a way to do the equity thing which doesn't kind of tarnish the business too much for later on, but still enables me to bring more people really on board with me in the business? Thank you. Sorry for such a long.
Can I jump in and help you?
Yeah, so I was going to say, but Rachel will be the person with the equity. Obviously, there's lots of share classes and structures. That's absolutely her bag. So do you want to answer that one first?
Yes, would love to. I'll try and answer as many actually as I can, and then Roxanne can come and fill in the very technical finance lending blanks. So yeah, it's not wrong that a tidy cap table makes things as easy as possible. So again, you can look at any firms that have done a raise on Companies House. You can look at their confirmation statement. Some is a nice, clean, tidy 3 pages long. Some is 7 pages long, and you think, oh God. However, as long as it's a tidy-ish cap table, as in we're not talking like percentages of percentages of percentages, and like all of it makes sense, right? So things like share options or shares vesting for employees or key stakeholders or people who've made a really great impact within your firm, it will always be better to receive the impact and be an investor of a business that's had that impact than a business with a tidy cap table with none of the impact. So focus on the output firstly. Secondly, though, I wish I could like snip what you've just said in terms of it's a very female trait to want to give away equity in business in exchange for people giving you advice and consulting and services. Sam actually just spat her drink out, I think, when I said that. Yeah, so like it's very feminine to want to do that, and like as quite an aggressively fierce protector of people who are very prone to doing that. You're not a charity. Like, this is your business. I actually know who you are just from like the huge amount of work that you've done with like Oxford University, and like you are such an impressive person, and I feel like I would really hate to see like sweat equity in my mind should not be a thing. Like that should not be a thing. As an accountant, I get offered sweat equity in every bloody business I work with, and like actually no one should be working for free. No one should be giving away equity in their business for things that actually your business model needs to work and needs to be able to pay people for the work they're doing in your firm in order to get someone to invest in it because it's a great business. And so just if you wanted a TED talk on like why all women think their businesses should be CICs and why they want to give away all of the equity to people for doing stuff that actually your time would be better spent turning it into a business that is profitable enough to pay the people for the work that they're doing, to increase the valuation, remove yourself from the business, because the more you're in it, the less it's worth, and get it to that point. My question to you on the invoicing and like sort of the debt factoring is, can you tell me more about the, like, is it that people aren't paying you on time? Is it like a credit control issue, or is it a long period of time that's causing cash flow problems? Because you work with like the type of businesses you work with.
It wouldn't normally have happened. So what happened is that the last year we had a really, really good year, and we had built the team up to 5 members of staff. One of them was a salesperson to kind of continue bringing in new business, and the role didn't work out. And the team, I was then on maternity leave myself, the team that were handling things in my absence didn't replace the salesperson fast enough. So our operating costs had grown very quickly, and the income then wasn't coming in, and no one took action fast enough. So what I've come back to is too highly inflated operating costs versus the income that's coming in. So I can recover it all by decreasing the operating costs and getting the income flowing in again. But the income flowing in again it will take about 6 months to get it rolling. So this afternoon I'm meeting with the Vice Chancellor in Bristol. That's going to be a great conversation, but it's going to take at least 6 months for any work to come out of it. However, we do have like a big annual program that we run, which we charge about £30,000 for each client to engage with us on. That's starting in January, and we've started to get some purchase order numbers coming in now for that program. So I'm like sending the invoice that straight away. But the challenge I've got is that we're still delivering programs and when we deliver programs, it costs us money to deliver them because we pay people like facilitators and coaches and consultants, but we've like spent all the money in the bank that we should have set aside to pay them. So that's why it's all like super, super tight. And I feel like really nervous about about getting a loan where I'm personally liable because of the idea of having my own mortgage tied to it just feels too stressful. So when I spoke to the insolvency practitioners, they were literally like, right,